All right, everybody. Very good morning to all of you. It is 11th of January 2025, and as we pass the NFP, the major event from US side, now we can have our focus shift. We can shift our focus toward upcoming week from. Let me have from January 13th to I think all the way to Friday, January 17th. So base case scenario is that we're gonna start from the US and then we're gonna move to Switzerland, then Japan, Eurozone, and so on. We will cover G7 uh, countries where usually market tend to put major focus on. Uh, Okay, so starting with the dollar, it's I think it's a good idea starting with the baseline, what baseline we have, and we all know, and we already have recently talked it before that the dollar is strong and there are fundamental reasons behind it, and we will go through one by one what fundamental reasons are those, and so starting with the Trump policies. Trump policies has been very positive, or been the stronger for the dollar, and the reason behind is four things. Okay, the first thing is the low taxation, and the other thing is he has a light touch regulations which he might put on the US economy. uh, the economists expect that is very supportive for the US growth in a short period of time. The other two we have is immigration control. We are very well aware of the situation situation that the Trump is really against a massive illegal immigration coming to the United States, and he really want to put a cap on it. He's not against. I think the recent comments. If I recall myself, the recent comments was he's in favor of H-1B visa, but I don't know how much that is true. But for sure, he's really against the illegal immigration coming to US through Mexico southern border and from the northern border of USA. So with tight policies he want to implement on the US, especially immigration control, and the other one is the tariff. We are well aware that the tariff is gonna be very positive for the dollar and very riskier for the countries that export, majorly reliant on exporting their stuff to the United States of America. So high beta currencies, one of them is Canada, and the China is also very much highly sensitive to these talks about the tariff, and also the Mexico. Last thing is the Mexico that is really sensitive to the talks of tariff. So one thing, the reason behind the expectations of a stronger dollar, overall stronger dollar, is the Trump policies which he start. I think he's gonna start implement on the day of his inauguration. I think that's gonna happen on 20th of January, and to be honest, as of now, the market is really pricing in the strength of the dollar just because one of the reason is tariffs, and but market doesn't know that how he gonna impact those tariffs. I was reading some articles, and one of the article was stating that he might go for 2%, and he might use this as a negotiation tool uh, to bring uh, to bring other countries tariffs down, or stuff like that. So So till I think his policies started getting placed in the economy, it's gonna be hard to say that how dollar gonna react after that period of time. The other thing is hawkish Fed. If if I get you to just give me a second on my Excel sheet here. So yeah, right here. Sorry about that hiccup. I think I can't get rid of this. Might be a little water, sip of water. Nope. So looking at the FOMC rate season we had on the 18th of December, it was hawkish. I mean, they couldn't have gotten more hawkish than this. The Federal Reserve. I don't want to go all over this again. It's just the baseline is that the Fed was hawkish. Their projections was really hawkish. CPI, unemployment rate, GDP, Federal fund rate, all was just pointing to the one way and saying that this is the policy which gonna help strengthen the dollar. So Fed being hawkish, even though we had some of the Fed officials coming out this week, uh, Fed official Muzalam, uh, he says that further rate cuts can wait. Viewed the last week as a close call, pretty much in line with the FOMC rate season. Bowman, if you look at Fed, should be cautious in considering changes to policy rates quoted. Some rate cut as a final step are very much in line with the FOMC rate. So majority of the officials have been staying in the hawkish bucket and emphasizing that there is no need to rush in cutting rates with the Trump administration coming into the power. We do have had comments from Waller, and he was a little bit dovish on his commentary, but as I said, it wasn't. I think an anonymous decision. Hammock voted to unchanged, and there was also really hawkish on one of the side for FOMC rate decision. So we have Trump policies stronger for the dollar. We have hawkish Fed, which is also support the narrative of a stronger dollar. So if we look at the macro, overall US macro data, looking at that, we know that the US right now having a sticky inflation. The GDP is really nice, 3.1% last time what they have reported to the market. I think it was a 3.1%, and we have a tight labor market. Tight labor market. We just had I think on this Friday we had a labor data coming out from United States, and if I just show you Friday, yep. So it was a decent print. I won't say that it was a monstrous miss. Beat. Sorry about that. And it was a nice beat with NFP beating the consensus 250k, and unemployment rate coming 4.1%, uh, down from 4.2%. Average earning was bit down 0.3%. I think it was in inline. If I just look at the forex factory here, okay, so dollar apply. So yeah, uh, average earning was in line with the forecast. NFP was a beat, and unemployment rate came down from 4.2 to 4.1, which is clearly indicating that the U.S. economy is not deteriorating. So with all this stronger economic growth, especially major peers, and stickier inflation from policies, hawkish Fed, with all that, I I think it is reasonable to say that the strength we are seeing in the dollar, the strength we are seeing in the dollar is valid, right? So I think I won't say it as it is not showing or in line with the fundamentals. It is purely in line with the fundamentals. So for this week, I can see that the dollar is really stretched to the one-sided positioning. So I mean, calling for retracement, I think will give us a more opportunity, because the majority of the participants is holding onto their position on a long side. So with that narrative, that we know that overall the dollar should remain strong, but with the positioning and with the stretched in a long position we have right now, I think unwinding of those positions with one nice miss in the US data can give us a nice opportunity to go another long. So we will look into that, starting with the starting with next week. So Tuesday, let's just go to tier tier one data. Let's just forget about the bond market here. Uh, January 14, Tuesday, we're gonna have a PPI. So here's a quick reminder that this time it's gonna be important, and you may say why. So the reason is that the PPI is coming earlier this time. Usually it comes after the CPI report, but this time it is coming a day earlier from the CPI. So probably we will look for some clues from this PPI, that where the CPI can land. And those who don't know that the PPI is a purchasing producer purchasing index. Okay, so yeah, producer price index, and this is exactly that, the how much is it costing to produce some certain goods, and those goods prices get transferred to the consumer CPI. So we have here that consensus is looking for I think a miss. So point 0.4 was previous consensus, for that is 0.3 for month on month. Year of year is 3.4. A market is expecting to take it higher. So any miss, I think a miss in US data can give us a nice tradable opportunity for a short period of time. Don't take it as you're gonna hold on onto this trade for longer than usual, because it's gonna be against fundamentals. But for a shorter period of time, it can give us a nice opportunity, and with nice pips, I think it's gonna be wise to just get out from that trade rather than holding that trade. So now that was the PPI, and as I said, it's gonna be important this time. So Wednesday we're gonna have inflation report from the US, and we know that the inflation has been very important data for the Fed alongside the labor. So the on this Friday we had a strong labor, and I think if we get a nice miss on this data, as I said, of course, it's gonna give us a nice opportunity. But if we get a beat, that can give us some tradable opportunity. But I won't trust that data to help us to go further to the dollar index. Because if we look at it, is already trading at the end of the chart. It is July. We are already way above. Okay, October 2nd, we are close to those levels. So I mean, I'm not saying that I can't get there, but for me, it just looked too stretched right now. I just want to see a pullback. That's all I'm saying. Nice miss can give us an opportunity for a retracement in the move, and then after that we can look some longs, and also can give us another pinch of salt that we know that the majority of the long positions might got have unwinded. So any miss will be preferable, and a beat, I mean, we can trade that, but it has to be a monstrous beat. So with that out of our way, we can move to the Thursday. We're gonna have again the usual jobless claims. These are sometimes stays in the focus for the market, but I think going for about 250 is what I will look to say that it can become a tradable. Okay, so let me show you that. Why I'm saying that. So if we go to 5 years, where we are. Oh no, this is not that data. Mm, come on, right here. So let's just stay in this zone. So 2022. Why I am continuously initial jobless claims. Here we are. Yeah. So we are on a right place right now. Hmm. Starting from this year. Okay. As we can see that it has barely hit 250,000 initial jobless claims. So I mean, if I really want to show the dollar after the CPI miss or beat, or PPI miss or beat, if I really want to go for initial jobless claims, I want to see a number going about 250K or close to 190K. I mean, that's the only numbers I'm interested for this week. Other than that, I have zero appetite trading initial jobless claims. We are gonna have some business indexes or Fed employment, new orders from Philly industrial side. It's nice to have this data, but I have never found it tradable. So we're gonna not. I think I don't want to waste my energy on this specific data. Uh, Friday. Friday, nothing major. I don't see. So I think the major data we have from USA is gonna be PPI, CPI, and uh, the initial jobless claim, if it may provide us some tradable opportunity. So as I said, overall, a bigger picture is we are bull- bullish on dollar, but with the positionings we have right now, and the dollar is so much stretched, I think seeing a nice pullback in the dollar can give us a nice opportunity, and can give us another reason for next week that we should get back to the fundamentals and start looking for long opportunities in dollar. Now that being said, there was the US side bias I have right now. Now let's move to the Switzerland. Switzerland. All right. what we had this week. Okay, so let me also show you guys my Excel sheet on Switzerland right here. So right now, what I see is that the SNB is dovish, and they provided a really dovish projections. So to make it short, it was a really dovish stand they took, with saying that they can tolerate a weakening of inflation below 0 to 2% target. And also they said, the chairman says that does not like negative interest rate. The likelihood of negative interest rates has become small, but even though they're still saying that that negative rates are possible. So dovish SNB we have SNB chair Chanel. He's also staying or commenting on a dovish side. We have inflation. We have recent inflation numbers. The inflation numbers came out 0.6%. The previous was 0.7%. It was from December. So if we just look at the projections here for 2024 quarter four, from a September forecast, the SNB was expecting that the inflation gonna close to 1% at the end of the December. Well, and then they revised their projections in December, saying that it's gonna 0.7. But if you look at the actual numbers, it came way below than that, 0.6%, which is another fuel on dovish or weaker Swiss franc. So uh, the labor market is strong, and the growth is nice, going around 2% year of year. So I'm not saying that the economy is falling off a cliff. I'm just saying that the inflation is really down, and they might hit the negative inflation. And going for negative interest rates can create further weakness in the Swiss franc, and can help the economy to recover faster. I mean, low interest rates are very helpful for the growth perspective, for the labor perspective, because it's gonna increase the industries to manufacture more with the cheap money. Inflation is gonna tick up because the consumer's gonna have more money to spend on. So with all of that, I'm currently looking weakness in Swiss franc. So here comes the bias. With the dollar this week, if it's a miss, I'm not. If it's gonna be a miss, I'm not looking to hold it against the Swiss franc, because I'm very dovish on Swiss franc right now. So uh, I can go for euro against euro, and we will touch on that later. But for the Swiss franc perspective, I mean, a beat in the US data can eventually give us a nice tradable opportunity, trading long on USD Swiss franc. So, with that thought in our mind, we don't have anything specific coming out from Swiss franc. We don't have any chairman or any official coming out from SNB, so we can't expect a one-sided flow in the Swiss franc. And with the beat in US, if we get a beat in US data, I think I won't hesitate getting involved in USD Swiss franc longs. So that was the Switzerland. Now let's move to Japan. Okay, in Japan, we were somewhere here, right here. So for Japan, let's uh, let's have a look overall where we are where we are, if I may say that, on a Japan's side. Okay, Japan, yep, right here. So let's start with the policy. Okay, last time they were they were somewhat some they have somewhat disappointed, if I may say that, they have disappointed the market by maintaining their interest rate, by not increasing it. The market was expecting interest rate hike, if I may say that, but they did not provide the opportunity, which eventually led weakness in the yen. So, and what was the reason? I think the reason was the wage growth. The Bank of Japan and other officials has really emphasizing on that, that the wage growth is has not been consistent, and they want to see a nice momentum in that the inflation, oh sorry about the not the inflation, the wage growth is going upward. So with that, uh, they gave that reason, and did not give the market what they were expecting, which eventually wasn't good for the yen. So back to the last week Japan economic data we had. We can look at the wage growth year is ticked up to 3% from 2.6%. If I just show you here that, I think there is a momentum, a promisable momentum, not assurable, but somewhat promisable, that we can see, or but the bank might hike this time, and says that they have seen a nice momentum upward in the wage growth, and which eventually led them to hike this time. So I think the usual interest hike the Bank of Japan do is 15 basis points, or maybe 10 basis points. So if that's the case, it's almost done deal, because market is fully pricing in a 15 basis points of hike. If it's gonna be a 25 basis point hike, I think that's led us to 50-50 chance. So, other thing also I want to mention here, that the last comments we had from BOJ, they were saying that they are thinking about the rate season for January, and they are also upgrading their core inflation forecast for fiscal year 2024-2025. And they said they haven't made any decision on raising rates, in terms wait until they have last moment before deciding on increasing their, which was somewhat hawkish, if I may say that. The yen has had the USD yen has fell after that news, and the reason was that I think the inflation forecast, they were saying that they're gonna upgrade it, and the market is really taking it as a positive way. So the last comment on January 7th, you can see here, Japan's official saying that wage growth this year at big firms will likely match levels similar to that of last year. And also, as a reminder, Ueda on December 19th placed emphasis on needing one more notch to decide on tightening. And I think the one notch he was talking about should be this one, 2%. So with that, I think the market is currently pricing in a reasonable that it can hike, and if they hike, I don't see that as an opportunity. However, what they have to say further will matter the most. Uh, it's gonna matter the most on this meeting. So if you say that, what would you trade it against? To be honest, I think it's gonna be nice. to just wait and watch. I think I would say that if I have to go for against yen, I will be very hesitant to do that. And if I want to go long yen, I don't think so. It's wise right now because the Bank of Japan, you can't trust these guys. They are the ones that never give us a time, exact time, that what time they're gonna increase their interest rate. It's just fun to watch this bank. So I want to approach wait and watch strategy, if I say that. So now the Japan is out of a way. Next economy or kind economy we're gonna look for is gonna be eurozone. So if I show you here the eurozone and euro price filter. Okay, and this time. So this week we haven't had much of a data we can talk about on, but overall, if you want to hear about eurozone, so to be honest, there is so many. I mean, ton of negativity is already priced in euro. So what I mean by that? So there's one problem. There's a constantly threat government, minority government in France. Second thing, we are having a Germany elections in February. Third thing, we are having a war in Ukraine, which is not going anywhere. I think until we have Trump in the office. We are having a worse PMIs. The inflation is ticking up in the eurozone economy. So when we look at the majority of these scenes, we can say that there is too much negative in the eurozone. And to be honest, it the price is reflecting it, and it has already been. I think eurozone is trading. Let me just guys show you what I mean. Eurozone. So here is the Euro USD. So if I go for a higher time frame, look at this. Look at this chunky move we had. That's a 8%. 8% down from the last highs we had. So I mean, and if I say that with all of those negative data, we are trading here, and the market is just not pushing it short. I think the market is already very much short, just like dollar, as the market is very much long on dollar. The participants, the investors has been already very much dovish on euro. But how long they're gonna go, that's the point we are looking here. Last time when the Ukraine war started, the euro just went from 1.21 level to straight 0.9555 level. So if you say that this time this can happen, I won't buy that thought, because I think this time the market has been already know what's going on in Ukraine, and that's not the major problem right now. Uh, so what price level I'm looking for is kind of tricky, but I do know that the any good data out from eurozone can help us to go long, especially this week if we don't get any mess in the US dollar, or let's just say we get a nice beat in euro side, and we get a beat in a miss in the US dollar. Then we can look for some further longs in the eurozone. So looking at this week, we don't have gonna have any tier one data from eurozone side. We do gonna have final core CPI and CPI. European market is expecting no change in it. So We will have a look what we get out from this. But just a reminder that that for a euro, I think there is less opportunity. I'm not saying that there is no opportunity. I'm saying there is less opportunity shorting euro than going long. But I think I will consider going long because I already know that the market has hugely priced in the negativity from the eurozone. Now, with that, what we have next? I have here on my desk New Zealand. So New Zealand, it is New Zealand right here. This week. Okay. So, if you ask me what thoughts I have for New Zealand, so New New Zealand has been having a really uh, worse growth. If you may ask me, the last report we had, quarter of quarter came negative 1%, and year of year came negative 1.5%, which was down from last time negative 0.5%. Like, clearly the economy is not doing well. We are having inflation which is coming down 2.2%, nicely heading down, and the labor market is going up 4.8%. So the last time the market was pricing in 75 basis point of cut, which I think some sort of aggressive cut, that what was market expecting. But think about, like, if they could have given the 75 basis points of cut, it could have signaled the investors that there is something wrong with the economy, and there is a one rule that you do not let the investors think that you need to keep that trust in the economy so that you don't face any fiscal or any monetary issues in your country. So that is what happened in UK. So we'll touch on that later at the end. So I was at the labor. I said it was close to 5%, but the last time they cut their interest rate for 50 basis point, which is reasonable. And I think with the economy that is not doing well, inflation is heading down, but the labor is not doing great, and the growth is down. 50 basis point was reasonable, and I do expect that another 50 basis point cut is also a reasonable call from the RBNZ. And if I show you on my chart on my Excel sheet, New Zealand, uh, the governor over said that they left the door open for further 50 basis point cut. Confident that economy will pick up in 2025. Expect to be around neutral. Okay, so what are the neutral numbers? 2.5 to 3.5%. We are currently at 4.25%. So if they decrease the interest rates by 50 basis points, we're going to be at 3.75, and another 50 basis point cut, and we're going to be at their neutral levels. But I think they if the economy still does not started to showing a nice, how I can say that, nice recovery, if I may, then I think the bank can go to 2.5%. So other thing to keep in mind that the New Zealand is one of the high data currencies, and it is highly correlated to what is going on in China. So all we know that there is a tariff problem lingering around since the Trump got elected. The China tariff calls putting pressure on New Zealand, because there's a these New Zealand and China is a close partners, and in exporting, importing, and alongside Australia. So If you ask me that what my thoughts on overall New Zealand, to be honest, it seems to me that I'm right now neutral because we don't hear much from New Zealand side. I just want to say neutral right now, and I'm a bit hesitant to trade it as the tariff fears still looming around with China is currently struggling. We do hearing nice calls from China saying that they're gonna proactive this time. But to be honest, that I just wanna wait and watch that what happens, and till I don't see a nice low hanging fruit. I would like we stay patient. So the data, if we look at last week, we haven't had much from New Zealand side, but this week I think the only data we're gonna have that's gonna be food inflation year of year. I don't know how much it's gonna be important, but this is something that we are getting. Other than that, we are having some auctions, and never mind about those auctions. So that's it. That was the New Zealand. Australia. Let's move to the Australia. Mhm. So 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 Australia. And let's start from the bottom. What we had from RBA. Okay, so now I have that on my screen, and let's have a look at their last rate decision. The bank maintained its cash 4.35%. So overall, quick summary: if we look at that they seemed less concerned about the inflation, and they said they have increased confidence that inflation is declining as forecast. They were slightly dovish, but overall, it was a nothing major that we can have from RBA. So from a monetary side, the inflation last time was at 2.8%. Growth is a quarter of quarter is at 0.3%, and the labor unemployment rate is at 3.9%. Uh, so as I said, this currency, just like New Zealand and Canadian currencies, are uh, are correlated and not correlated, are highly sensitive to tariffs. So going before choosing any direction for Australian, Aussie, or for New Zealand Kiwi, I think with tariff news going around, and I think it's gonna get more active during the Trump administration. It's just nice to just stick to wait and watch a scenario that can give us a nice, if that provide us nice short term, long term opportunities we can jump into. But for the short term, we're gonna have some labor data out from Australia on January 15th. Unemployment rate is expected to tick higher, 4%. The best part of this job report is that we're gonna have full time and part time. So along all of this data, the major one is going to be full-time employment. Even though we see a nice chunk higher in this number, if the full-time employment is low, where it's gonna not gonna be considered as a good report. So we want to see a full-time employment going higher, employment change going higher, and unemployment ticking lower or at, that can give us some sort of a short-term opportunity, not long-term opportunity. For the long term, I think it's not it's to just sit on the sideline and have and wait for another reason to go to have any bias on this currency. So Canada, it is. So if we look at Canada, we have had a very nice job report from Canadian side. Okay, so this hiccup is not going anywhere. Uh, the job report came very nice, but it doesn't mean that it changes the overall bias on Canadian economy. The current government PM, government official, Liberal Party PM Justin Trudeau just resigned, so which gave us a nice positive short term bias on Canadian dollar, but not significantly strengthen the loonie. But with that, we had a strong job reports. Unemployment rate ticking lower, 6.7%. Uh, but as I said, it's very sensitive to tariff. So last time that Trump said that he gonna implement 25% tariff on Canada if they does not solve their border issues, and that really that really that really pushed the loonie downward downside. So we are having inflation 1.9%. We are having labor sitting at 6.7%, and the growth is not skyrocketing, rocketing. But last time quarter of quarter was sitting at 0.3%. The bank was eventually hawkish last time, but not that much. So overall, if you say that, I think weakness in Canadian dollar from a economy side, from a bank side, is reasonable. But with the tariff calls from USA side also putting pressure on loonie, we're not gonna have any major events coming out from a Canadian economy side. But we do have one speech, Bank of Canada Gravel speaking. I don't know how much importance the market gonna give it to Bank of Canada. Usually finding it that that Canadian, Canada, New Zealand, Australia, the market does not tend to give them much of the focus or attention unless it is very something out of the line. So with that keeping in mind, uh, I do see that the loonie is right now. Let me just show you on my screen. Uh, is trading at close to its recent highs 1.466 level. But if it gets to this level again, and we get a nice miss in dollar, then I think looking for the short term downside in the US Canadian dollar is not gonna be out of the ordinary. So with that being said, I'm feeling tired right now, and we will touch on pound, United Kingdoms some other day, and I think we have current majority of the countries with the current bias what we have on. We are some countries like US doing really great, some not. So with that being said, you all have a very good weekend, and if you have any questions, don't hesitate to let me know.